Opendoor closed Wednesday session at $5.13 per share, up just 4 cents on the day, or about 0.8%. At first glance, that might look like a fairly uneventful finish. But scratch beneath the surface, and Wednesday was anything but quiet. Between insider sales, boardroom meetings, and retail resilience, this was a day that speaks volumes about where this stock is and where it could be headed. Let's start with a headline that broke late in the day. Carrie Wheeler, Opendoor's former CEO who resigned under pressure just last month, filed paperwork on Tuesday to sell 7 million shares of Opendoor stock. At today's prices, that's a haul of about $35 million. And the kicker? That same stake was worth only $3.6 million back in late June, before Opendoor went viral across social media and became the latest darling of retail investors. Now, whenever a former executive dumps shares, especially one who resigned under a cloud of pressure, the immediate instinct is to treat it as bearish. Insider selling, after all, often signals a lack of confidence in the future. But here's the thing, the market barely flinched. The sale went through, and Opendoor actually closed higher on the day. That tells us something important: retail investors absorbed those shares. The conviction of the open army is strong enough that even tens of millions of dollars in insider sales couldn't derail the stock. That's resilience, and it's a bullish sign. This also underscores just how much the narrative has changed in the span of 2 months. In late June, Wheeler's stake looked like a consolation prize, worth just a few million. Today, thanks to the retail wave, it's a life-changing payday. That transformation in valuation shows how quickly sentiment can rewrite the story of a stock, and it's a big part of why Opendoor continues to dominate conversation across platforms like Reddit and X. But the Wheeler sale wasn't the only story of the day. While that paperwork was hitting the wires, Eric Jackson was on the move in New York City. After his high-profile streak of 13 straight days camped outside Drake's mansion, Jackson shifted gears and headed east, meeting with members of the Opendoor board. He later posted that he had a good meeting, and laid out clearly what he and the retail investing community see for the company's future. Most notably, he reaffirmed his now famous $82 price target, pegged for 2028. But he added a provocative twist. If management gets things right, Jackson said, that target could be hit by Christmas. That's right, Christmas of this year. Now, let's be clear, that's an audacious call. For a stock currently sitting just above $5, reaching 82 by Christmas would mean a 16-fold increase in just a few months. That kind of move is almost unprecedented for a company of Opendoor's size. But what matters here isn't whether 82 by Christmas is realistic, it's what Jackson is signaling about expectations. He's telling the board, and by extension the market, that if the company leans into the right strategy, if it aligns with a retail base, and if it executes on technology and leadership, the runway for growth is enormous. And that brings us back to the boardroom. The CEO search remains ongoing, and it's the single most important decision the board has to make in the near term. Interim CEO Srisha Radhakrishna has done a commendable job stabilizing the ship, engaging with retail, and even putting his own money into shares. But the permanent CEO pick will define the next phase of Opendoor's evolution. Will they stick to the old capital-heavy iBuyer model, or will they accelerate the pivot toward an asset-light, AI-enabled real estate marketplace? Retail investors have made it clear they prefer the latter, and Jackson is amplifying that call directly to the board. The chatter around Keith Rabois only adds fuel to this fire. The co-founder has been cryptic but critical online, voicing displeasure with how the board operates and hinting at frustration with consultants. While nothing is official, the possibility of Rabois rejoining the board in some capacity would be a symbolic win for retail, a return of founder DNA, and a potential catalyst for renewed confidence. Pair that with Jackson's presence in the room, and you get a picture of retail influence moving from the street corner to the boardroom table. So let's recap Wednesday. Former CEO Carrie Wheeler sells a massive block of shares, 7 million in total, and the market shrugs. Retail strength absorbs the blow and the stock holds steady. At the same time, Eric Jackson sits down with the board, presses the case for an $82 target, and even suggests it could be achieved by year-end. Keith Rabois lurks in the background, firing off critiques that stoke speculation of a return. And through it all, Opendoor trades higher on the day, hitting an intraday peak of $5.40 before settling at $5.13. What does this mean heading into the rest of the week? First, it reinforces the idea that support around the $5 level is real. Despite volatility, despite insider sales, the stock has found footing. Second, it means retail conviction isn't going anywhere. If anything, Today's events are proof of just how much power the Open Army now wields. They are no longer just participants in the stock, they are, in many ways, the stock's lifeblood. Third, it shifts the spotlight back to the board. With Wheeler out and cashing in, with Srisha holding the interim title, with Jackson knocking on the door, and with Rabois circling, the pressure is on to make a decisive move. Transparency, leadership, and strategy are no longer optional, they are mandatory. The market is demanding it, and retail is demanding it even louder. There's also a symbolic layer worth mentioning. Wheeler's sale is, in a sense, the closing chapter of one era of Opendoor. Her exit under pressure, her cash out at the top, and her silence since leaving speak volumes. In contrast, the new era is loud, messy, and dynamic, defined by retail voices, active interim leadership, and the possibility of founder re-engagement. For investors looking at the long term, this is a stock in transition, and transitions create opportunity. Of course, volatility remains part of the deal. This is still a company without steady profitability, in a housing market that is sensitive to interest rates, and facing stiff competition from traditional players like Zillow and Redfin. But the difference now is that Opendoor has a community behind it. Retail energy, combined with technical setups like the Golden Cross earlier this week, creates a combustible mix. So where does this leave us for Thursday's trade? Watch the $5 line. If it holds, it confirms support. If the stock can push toward $5.50, it could open the door to $6. Keep an eye on updates from Jackson. If he shares more about his board meeting, it could become a catalyst. And listen for any new signals from the board itself. Insider buying, leadership announcements, or even subtle shifts in tone could all move the needle. In the end, Wednesday's session was a reminder of just how unique this moment is for Opendoor. You have insider selling on one side, retail absorption on the other, a board under pressure in the middle, and a co-founder sniping from the sidelines. That's a cocktail you don't see every day, and it's why this stock continues to captivate so much attention. For long-term bulls, the takeaway is clear. The short-term noise, insider sales, day-to-day volatility, cryptic tweets, isn't what matters most. What matters is whether Opendoor emerges from this transition with the right leadership, the right strategy, and the continued support of a retail base that has already proven it can absorb 7 million shares without blinking. If that happens, then maybe, just maybe, $82 by Christmas isn't as crazy as it sounds.